You save $50,000, but here's the problem. Your money's sitting in a savings account or low-return investments, barely growing. You know you could be doing more with it, but here's the problem. Every time you look into investing, you're bombarded with endless options: stocks, bonds, ETFs. It's a maze. And the more you research, the more overwhelming it feels. That's where this video comes in. I'm going to simplify things for you by showing you 5 of the best Fidelity index funds that can grow your $50,000 into something much bigger over the next 10, 20, and even 30 years. I'll break down exactly how much you can expect to make from each of these index funds. In the end, I'll show you a Fidelity trust that has the potential to turn a $50,000 investment into a portfolio valued at over $10 million. Investing isn't just about jumping into the fund with the highest return potential. There's a lot more to consider if you want your money to grow steadily while managing risks over time. So how did I choose these 5 Fidelity index funds for this video? Let's break down the key criteria that makes these funds stand out. First, I looked at growth potential, the likelihood of these funds delivering strong returns over the years. Whether you're looking for explosive growth or consistent, steady gains, each fund I picked has a proven track record of increasing in value over time. I also considered dividend yield. If you're looking for income along with growth, certain funds provide regular dividend payouts that you can either take as income or reinvest to grow your portfolio faster. Next, I evaluated sector exposure. These funds cover essential industries like healthcare, industrials, and tech, sectors that are positioned for growth in the upcoming decades. This gives you diversified exposure to different parts of the economy. Finally, long-term reliability was a key factor. I wanted funds with a solid history of withstanding market ups and downs, giving you the confidence that your investment can ride out tough times while continuing to grow. Let's start with one of the most reliable sectors, healthcare. For me, the best index option for this is the Fidelity Msci Healthcare Index ETF, or FHLC for short. It gives you access to some of the healthcare industry's biggest and most stable companies. Healthcare is a critical sector that tends to stay strong regardless of economic cycles. People will always need healthcare services and products, making it a dependable choice for long-term investors looking for stability and growth. FHLC includes major players like Johnson & Johnson, AbbVie, and United Health Group. Companies that are not only leaders in the field, but also have a proven track record of performing well even during economic downturns. These businesses aren't just focused on growth. They're also known for paying dividends, which can provide you with an additional income stream on top of the capital appreciation. Currently, FHLC offers a dividend yield of 1.33%, with an average dividend growth rate of 12.42%. This means that the dividends you receive are not only consistent, but also growing at a healthy pace. In terms of capital appreciation, FHLC has averaged a share price appreciation of 8.92% over the past 10 years. That's a strong combination for those looking to build wealth while also earning income. Now let's look at how your investment could grow. If you were to invest $50,000 in FHLC today, after 1 year, your investment would likely grow to around $55,125. If you stay invested for the long haul, in 10 years, your portfolio could reach approximately $135,461. Fast forward to 20 years, and that investment could grow to around $388,833. Finally, if you hold on to FHLC for a full 30 years, your portfolio might be worth an impressive $1,210,269. After 30 years, those dividends could add up to an annual income of about $38,792, or about $3,233 per month. So over 30 years, the total value added to your investment would be approximately $1,160,269, with $878,899 coming from capital appreciation and $281,370 coming from dividend reinvestment. Next up, I have the Fidelity MSCI Industrials Index ETF, also known as FIDU. This index fund gives you exposure to a broad range of industrial companies. The industrial sector includes businesses that are vital to economic growth, such as those involved in manufacturing, construction, transportation, and aerospace. These industries help build and sustain the infrastructure that powers modern economies, making them essential for long-term growth. FIDU holds stocks from major companies such as Honeywell International, Union Pacific, Deere & Co., Boeing, and Lockheed Martin. These are companies that are not only crucial to their respective industries, but also tend to perform well when the economy is growing. The industrial sector has a long history of being a reliable performer during periods of economic expansion, but it can also withstand downturns by adapting and innovating. When considering FIDU, it's important to look at its current dividend yield of 1.24%. This means that, in addition to potential growth in the share price, you also receive regular dividend payouts. FIDU's average dividend growth rate stands at 8.75%, and in terms of price growth, FIDU has seen an average share price appreciation of 10.32% over the past 10 years, which makes it a strong contender for investors seeking both growth and income. Now, let's talk about the future. If you invest $50,000 in FIDU today, your investment could grow steadily over the coming decades. After 1 year, your portfolio might grow to around $55,780. Staying invested for 10 years could see your investment rise to approximately $148,177. After 20 years, that $50,000 could become $432,511, and if you hold on to FIDU for 30 years, your investment might grow to $1,246,162 and pay $8,790 in dividends each year. So after 30 years, the total value added would be around $1,196,162, with $1,101,259 from capital appreciation and $94,903 from dividend reinvestment. The next fund I'm going to look at is the Fidelity Msci Consumer Discretionary Index ETF, or FDIS. This gives you access to some of the biggest players in the consumer discretionary sector. This sector includes companies that sell non-essential goods and services, things people typically buy when the economy is strong and they have disposable income. Think of products like cars, luxury goods, entertainment, and home improvement. FDIS holds stocks from well-known companies such as Amazon, Tesla, Home Depot, McDonald's, and Nike. These are companies that thrive when consumer confidence is high, and people are willing to spend money on goods and services beyond their basic needs. The consumer discretionary sector can experience explosive growth during economic booms, making FDIS an appealing choice for investors who are looking for higher returns and favorable market conditions. Now, let's break down the numbers. FDIS offers a relatively modest dividend yield of 0.75%, but where this fund really shines is in its share price appreciation, which has averaged 12.53% over the past 10 years. Additionally, FDIS's average dividend growth rate of 9.07% means that even though the current yield is lower, the dividends you receive will likely increase over time, adding to the overall return. If you were to invest $50,000 in FDIS today, after 1 year, your investment could grow to around $56,640. Hold on for 10 years, and you would see your portfolio reach approximately $172,350. After 20 years, that same investment could grow to about $584,144, and by 30 years, your investment could balloon to an impressive $1,956,427. Even though FDIS's main focus is capital appreciation, you'll still receive dividends along the way. After 30 years, the annual dividend payout could be around $4,685. In total, over 30 years, the total value added would be about $1,906,427, with $1,853,923 from capital appreciation and $52,504 from dividend reinvestment. Now, if you think those returns are impressive, just wait. In the end, I'll show you a Fidelity fund that has the potential to reach that valuation in just 20 years and has the potential to exceed $10 million in valuation over the long run. At number 2, I have the Fidelity NASDAQ Composite Index ETF with the ticker symbol ONEQ. This fund offers exposure to the companies that are driving the future, with a heavy emphasis on tech giants. The NASDAQ Composite Index is known for its high-growth companies, particularly in sectors like technology, communication services, and consumer discretionary. Its top holdings include big names like Apple, Microsoft, Amazon, Nvidia, and Alphabet, or Google. These are companies that have not only revolutionized their industries, but have also shown consistent growth year after year. With tech continuing to disrupt every corner of the economy, this fund gives you access to some of the biggest winners in the stock market. The heavy weighting in tech means this fund is growth-oriented, making it an ideal choice for investors looking for long-term capital appreciation. It currently offers a dividend yield of 0.64%, which isn't particularly high, but that's not where this fund shines. The key here is share price appreciation, which has averaged 15.11% over the past 10 years. This high growth rate, driven largely by the performance of tech companies, makes ONEQ a powerful vehicle for long-term wealth accumulation. Additionally, ONEQ has seen a dividend growth rate of 7.91%, which means that over time, your dividend payouts will increase, adding another layer of growth. Let's get into the numbers. If you invest $50,000 in ONEQ today, after 1 year, your portfolio could grow to about $57,875. Stay invested for 10 years, and you could be looking at a portfolio worth around $212,674. In 20 years, that investment could grow to an impressive $885,518, and after 30 years, it might skyrocket to $3,649,945. While ONEQ is mainly about growth, it still offers dividends along the way. After 30 years, you could be receiving around $2,323 in annual dividends. All in all, after 30 years, the total value added would be approximately $3,599,945, with $3,569,017 coming from capital appreciation and $30,928 from dividend reinvestment. And finally, at number 1, I have the Fidelity Msci Information Technology Index ETF, ticker FTEC, which is all about technology. If you believe tech to drive the future, this fund should be on your radar. FTEC offers concentrated exposure to the information technology sector, giving you access to companies that are leaders in everything, from software to semiconductors to cloud computing and artificial intelligence. Technology continues to reshape industries and economies, making this fund a strong choice for investors looking for significant long-term growth. FTEC's top holdings are some of the biggest names in the tech world, including Apple, Microsoft, Nvidia, Visa, and MasterCard. These companies are not just at the forefront of technological innovation, they're also leaders in market capitalization and have shown tremendous growth over the past decade. Whether it's the latest smartphone, cloud infrastructure, or payment systems, these companies are shaping the future of business and consumer technology. In terms of performance, FTEC offers a current dividend yield of 0.65%. While the dividend yield might seem modest, the real strength of this fund lies in its share price appreciation, which has averaged a remarkable 19.29% over the past 10 years. This high growth rate means that FTEC has the potential to deliver substantial returns, especially for investors with a long-term horizon. Additionally, FTEC's dividend growth rate is an impressive 14.69%. Meaning the dividends you receive from this fund are likely to grow significantly over time. So what kind of returns can you expect if you invested $50,000 in FTEC today? After just 1 year, your investment could grow to about $59,970. In 10 years, that $50,000 could transform into approximately $304,991. Stick with it for 20 years and your investment might soar to $1,829,682. And if you're patient enough to hold on for the full 30 years, your portfolio could reach a staggering $10,862,823. By that time, you could be earning about $15,085 annually in dividends. The total value added would be an incredible $10,812,823, with $10,692,596 from capital appreciation and $120,227 from dividend reinvestment. Want more in dividends? Click the video on the screen to find out how to turn $100,000 into a portfolio valuation of $17 million that pays over $100,000 in dividends.